One of the big stories in 2026 has been the rapid rise in bond yields in Japan. So as we look at what's happening there in that market, we see 30-year yields that really had just moved parabolic. So no gentle increases, just massive increases, particularly over the last week. And we see the 30-year now at levels that it's never been before. It does have a shorter history, so even if we drop down to the 10-year there in Japan, highest levels in 3 decades, or nearly 3 decades. So either way, significant reaction by the markets. And really, it was catalyzed by the most recent announcements by the government there and the prime minister about tax cuts and worries over fiscal concerns. And honestly, it had been brewing for a while. It's had one of the larger debt to GDP ratios of developed nations around the world. So this was just kind of like the last thing that really pushed it over the edge. And the price activity got us thinking about a very similar period or similar reaction from just a few years ago, 2022 in the UK. So late summer, early fall, a similar thing. Budget proposals with large tax cuts, other significant fiscal deficit impacts to that. And the bond market essentially just said to the UK, no, you're not doing this. And so, it reminded us of one of our favorite quotes from James Carville, the political pundit, that said when he died, he wanted to be reincarnated as the bond market because it can intimidate anyone. Well, it certainly did in the UK, and it's doing its best to come after Japan at this point. So the chart we'll lay up here for you puts these two things together. So in white, you'll see the UK yield from 2022. In blue, the Japanese yield from this year. And essentially the scale across the bottom is the number of days past the start. So the start in 22 or the start this year. And what you see is a pretty common period. Once the market gets wind of this, about 2 to 3 weeks in, we see these large moves. Now, as we play out over what ends up being about a 60-day period in the UK during 2022, we see these spikes up and down, and then we see it eventually return reasonably to normal. The reason it did that is because everything just changed. So they backed off the policies. Some of the people got fired, others resigned. I mean, it was major changes in reaction from the bond market just intimidating and saying, this is a bad idea and we're going to make you pay for it. So it'll be interesting to see if Japan does the same thing. Do we see changes in policy? Do we see changes in people? And how does the bond market react to that? So we did a video, maybe 4 to 6 months ago on bond vigilantes. And at that time, we said, we're seeing a lot of these deficit spending policies in countries around the world, but we're not seeing rate impacts yet. So wonder if this is changing. Have we awoken the vigilantes? Are they just choosing Japan for now? Obviously, we don't know the answer to that, but this reaction and the severity of it certainly makes you wonder. And the other conclusion we would say from this is watch U.S. yields closely. They had been largely range-bound, popped a little bit over the top end of that range on the 10-year in the past few days, certainly not to the degree and magnitude that Japan has done. But are we starting to see that reaction here? And then how will we take whatever the decision the Supreme Court makes? So are the tariffs legal, in which case fiscal situation is what we think it is? If they rule some of them out and some of that money has to be sent back, it changes the picture. And so are we going to see this kind of reaction here in bond markets in the US as well? So let's definitely watch both of those, and we'll see if this is just a passing fad or if the vigilantes have really returned and are starting to focus on some of these developed countries with larger deficits. So we'll share more thoughts when we have them. Thank you for your time today.